How crypto candlestick charts work, a whiteboard outline. Here we go. What are candlestick charts? What in the world are they? We're going to cover this today in today's episode of Crypto Info, Blockchain Made Easy, with your host, Frank the Crypto Tank. Okay, guys, we have two types of candles. We have a bullish candle and a bearish candle to start off with, okay? We have a bullish, what we call candle body here. We have a wick and a wick. We have the close here for the day and the open. We have the high and we have the low, okay? That's the bullish candle. Okay, so for a bearish candle, guys, we have a bearish red candle body with a wick at the top and a wick at the bottom, but now the open is up at the top and the close is at the bottom because for the day we came down and went red on the day. We have the high here and the low here as before. So those are the two main candlesticks that we look at when we look at candlestick charts. Okay, guys, when we actually start trading the market with candlesticks, our first type that we're going to look at here is called a doji. And this doji is the market being very indecisive. So it just shows up pretty much as kind of like a cross. Okay, guys, the next candlestick, number 2, is the hammer. We love the hammer. It looks like a carnival hammer. This hammer is a bullish reversal after a downtrend just prior on the charts. So when we're looking at something like day trading, which we do not recommend here on the channel, when we're looking at even swing trading, any chart in general, any time frame, in other words, okay, so we're on tighter time frames, kind of like a minute chart, a 30-second chart for day trading. If we're going on longer time frames, we're looking at something like a 1-day chart, a 7-day chart, and so forth. When we see this hammer, it's a bullish reversal signal telling us on the charts that we very likely are about to go up. Now, none of these, bear in mind, please, are definites. These are indicators. That is all. They don't always work. They work most of the time. If you want to look at the average, they'll work about 68% of the time or so. This is a bullish reversal. It's a green hammer. We love to see this. Okay, folks, this is the third type. This is an inverted hammer. This is a bullish reversal. We have down movement. We see the inverted hammer, and then we see up movement. Okay, so a shooting star number 4 is a bearish reversal signal. Here we have the market climbing up with green candles, and then we have our shooting star, and we have a tank show happening. Again, doesn't happen every time, most of the time. Guys, this fifth type is called the Gravestone Doji. This is a bearish signal that buyers have lost momentum. Guys, number 6 is the Dragonfly Doji. This is a bullish signal that the sellers lost momentum and that we're on our way up. Okay, number 7 is a Bullish Engulfing candle. And this is where a large green candle swallows up the prior red candle. It's a strong upside reversal. And lastly, we have number 8, which is a Bearish Engulfing candle. This is a large red candle that swallows the prior green candle. This is a strong downside reversal signal. Okay, guys, the RSI, or the Relative Strength Index, is an indicator that tells us whether or not the market is overbought or oversold. If we come up above and hit the 70 line, we're in overbought territory, which means we're getting ready to come back down, which is why it's in red. And then if we come down and bump the 30 line, we're in oversold territory, which means we're ready to buy some more and go back up, which is why she's in green. So that's the RSI, and that's another tip to tell us where the market's going. These are indicators, guys. These are not foolproof markers for the market. These are a guidepost for us when we trade. Guys, understand none of this is financial advice. I am not a financial advisor. This is strictly for educational, informational, and entertainment purposes only. What you do with your money is your business. We're not responsible for your financial decisions. Thank you. Okay, finally, we have the moving average convergence divergence, or the MACD, which shows us that we subtract the 26-period EMA, or exponential moving average, from the 12-period EMA of the closing price, and we get our MACD reading. This is the most elementary explanation of this. This stuff all goes so much deeper. If you'd like, we can do a Candlestick Chart 200 course coming up, and we can jump on top of more of what MACD is and RSI, Relative Strength Index, and Stochastic RSI and things like this, terms you probably have heard of before. We can demystify these complicated chart terms for you, give you an idea of how they all work in our second episode, which we will do. Guys, thanks for tuning in to Crypto Info Blockchain Made Easy with your host, Frank the Crypto Tank, covering charts today, some basics on candlestick charts. I hope you learned something. Guys, please tap that like and subscribe if you got value out of this video and learned a little something at least about charts, how they work, some terminology. And also, don't forget to tap our Caleb link down below. Check out how they're different from an exchange like an Uphold or a Coinbase. They're actually a cryptocurrency brokerage firm, and we have an interview coming up, which is going to be live Monday, August 18th with Jim Bizzani from Caleb & Brown. So please join us for that interview in the comments section. It's coming on 5:30 Mountain Time here in Colorado. Guys, thanks for tuning into Crypto Info Blockchain Made Easy with Frank the Crypto Tank. We love you guys. Have a good one. We'll see you next time. Guys, this is the dragonfly emoji.